VYM, or the Vanguard High Dividend Yield ETF, is quickly becoming one of my favorite long-term buy and hold forever positions, and this is because of a few important reasons. Now, for one, VYM is super cheap to hold on to. I also happen to think that VYM has some of the highest quality dividend payers within the basket of stocks. But in this video specifically, we are going to dig a little bit deeper into this ETF, explain this ETF strategy, and show all this ETF has to offer. But then later on in the video, we are going to figure out exactly how much, or in this case, how little an investor would need to theoretically invest into a super high quality dividend growth ETF like VYM in order to retire completely off the dividend income produced by this ETF in the future. So if you consider yourself a long-term dividend growth investor, you are not going to want to miss this one. So drop a like down below and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, first off, over here on the Vanguard website, Vanguard is of course the provider of VYM. It says right here in the product summary, VYM seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. It also says provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. Follows a passively managed full replication approach. Now, like I sort of mentioned, one of the pros for VYM is definitely the expense ratio at just 0.06%, and it's honestly no surprise to me that VYM's expense ratio is so cheap because Vanguard normally has very affordable funds. But like I also sort of mentioned, one of my favorite parts about VYM specifically is the holding breakdown. All the stocks within this fund are very favorable, at least in my opinion, for a long-term buy and hold forever position. Now, the benchmark is as follows. It shows that VYM has around 2.2% basic materials, around 10.3% consumer discretionary, 11% consumer staples, 10% energy, 20% financials, 12% healthcare, 12% industrials, technology comes in at just under 10%, telecommunications 4.2%, and 6.4% utilities. Now, this entire breakdown for a seasoned dividend growth investor like myself really shows that this ETF not only has had some growth over time as far as price return, but also a lot of the sectors that we're looking at right here, stocks within these sectors for the most part paid dividends and have paid more and more in dividends over time. And of course, I'm just generalizing here, of course, but take my word for it. Now, some of the top holdings in VYM as of right now are also very favorable. A lot of names that, like I said, have had price return over time, but also have a decent starting dividend yield, and on top of that, pay more and more in dividends over time. Names like JP, which I'm a huge fan of, Broadcom, of course, we have ExxonMobil, Home Depot, PG, we have J&J, we have Merck, AbbVie, Chevron, and Bank of America. Now, all in all, in this portfolio, VYM has hundreds and hundreds of stocks, so you are getting a piece of a very diversified pie, overly diversified if anything. Now, VYM's price performance over the last year, this ETF is up 14.8%, which is pretty nice considering this ETF also does pay a decent yield off top. And on the max time frame, back since around 2006, VYM is up 135%, not even including dividends. But speaking of dividend, this is one of the main reasons on why I'm actually quite a fan of this ETF. And that's because even though I am a relatively younger dividend growth investor, I am personally most likely within maybe the next 1 to 3, maybe 5 years, I'm planning on using at least some of my dividend income moving forward to help with things like bills, vacations, etc. So in that case, although there are tons of other more growth-oriented ETFs out there that have the potential to maybe grow a lot faster than VYM, I look for dividend growth style ETFs personally. Again, this is just my strategy, that pay a decent dividend off tops so I can get a nice amount of cash flow in the next, say, 1 to 3 to 5 years. So VYM, where it's trading as of right now, we're clocking in at just under 3% starting yield and around 7% more or less dividend growth rate, which means year over year over time, VYM's raised their dividends around 7%, which is not bad whatsoever. And even back in December, VYM paid a massive dividend, surprising dividend investors $1.10 versus the previous December of 97 cents. So as long as history were to repeat itself, every single share of VYM that you or I purchase as of today, most likely, of course, once again, only if history were to repeat itself, which of course it might and might not, investors like us are going to get paid more and more over time in the form of cash flow for every single share that we have every quarter. Which next brings us into the final portion of this video. How much or how little could an investor invest into something like VYM with the current stats that it's offering and the current stats that it's offered historically in order to retire off the dividend income that VYM pays in the future? Well, let's attempt to figure it out. So VYM, an ETF that pays dividend quarterly with a $50,000 potential starting budget, which again, we're going to change around some numbers here, so don't worry, a $5,000 annual contribution, and an ETF that offers a 2.9% initial yield, around 7% annual dividend amount increase, like we said, around 5% more or less share price appreciation per year, 30 years invested. Now, before we go through these numbers, remember, these are all just estimations. Things could change in the future. VYM could skyrocket. VYM's dividend in the future could also move up or down. But just going off of these numbers, this is what we're looking at. So year number one, a $50,000 purchase into VYM. An investor would receive around $1,500 per year in dividends. Then after the annual contribution of around $5,000, and of course after those dividends being reinvested, by year number two, we're at almost $59,000 of principal and almost $1,800 per year in dividends. Now, skipping right ahead, by year number 10, that $50,000 portfolio would now be almost $160K with around $5,500 per year in dividends. Skipping even further ahead, this is of course for a long-term investor. This is not for the next 1 to 3 years. This is going to be a long-term buy and hold. 20 years in, we're roughly at $425,000 with around $18,000 per year in dividends. Nice size portfolio. Of course, at this point, you could choose to sell off some of your position and maybe potentially retire, or use this portfolio as a supplemental income during retirement. But let's be real here, not many people are going to be able to live off of $17,000 per year, so let's move forward. By 25 years in, now we're getting somewhere $675,000 portfolio with over $31,000 per year in dividends, and by year number 30, this is just going off 30 years, so if you're in your 20s, this of course could definitely be applicable to you, around $1,100,000 after 30 years invested, and a portfolio that now earns over $54,000 per year in dividends, which more or less could be enough to retire off of depending on what your expenses are at. Now, another great example of how much or how little an investor could buy into VYM initially and then retire off of in the future, a $25,000 initial starting principals, so basically cutting the other principal in half starting out with, and a $12,000 annual contributions. So instead of adding $4,000, $5,000, $6,000, let's double it to $12,000 per year, or let's say you buy around $1,000 of VYM every single month. Now, with this $25,000 starting budget, it's going to be a little bit slower at first as far as dividends go. We're only at around $700 in dividends the first year, second year almost $1,200. But as those dividends reinvest, and of course as those contributions continue to come in, by year number 20, this portfolio is already earning north of $25,000 per year in dividends and already up to $611,000 by 30 years. We're at 1.6 or $1.7 million with north of $80,000 per year in dividends. Which just goes to show that even if an investor starts off with a much smaller amount of money off top, as long as they contribute ongoingly a decent amount into the portfolio, or in this case, of course, into VYM ongoingly, the portfolio is still going to compound substantially if and when an investor chooses to invest into something as high quality, or at least historically as high quality, as something like VYM. Now, I definitely recommend all of you guys mess around with some of these free online dividend calculators and try to plug in numbers that might make sense to you, because let's be real here, some of you guys that are watching this video have much more to start off with, and some of you guys watching this video might have a little bit less to start off with, and the same goes with annual contribution, etc. So type in your own numbers, mess around with different investment vehicles. Different high quality dividend growth ETFs out there are great things to look into, especially if you're just getting started. So now that we went over VYM, and I share with you exactly how an investor could invest a relatively small amount of money into a dividend growth ETF like this and end up with a massive ending balance 30 years from now, but on top of that, massive dividends, I lastly want to hear from you guys down below. If you, as of right now, are purchasing a dividend growth style ETF on a daily basis or building on a position, I want to know which one you're buying as of right now. Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.